what heavy metal teaches us about financial survival. This week on the Extreme Personal Finance Show. All right. Hey, everyone. So to those that may not frequent a mosh pit, and again, it's been several years for me as well, but to those that may not, for those outsiders, you may think that a mosh pit looks just like pure chaos, right? A bunch of limbs and elbows flying, peeps jumping up and down like a psycho circus clown. Hopefully you guys got that. Just a bunch of bad decisions everywhere, right? But anyone who actually knows and has frequented a thrash show, a hardcore show, a punk show, and you're in the pit, there are kind of like unspoken rules, right? There's respected rules, and you kind of learn these rules that we all follow as you are at these shows. And so if you break these rules, someone might end up getting hurt, right? And if you ignore some of the rules, some people might get hurt, right? So in personal finance, there are some rules. And I think that if you were to ignore or break some of those rules of personal finance, well, it could last a lot longer than, let's say, a bruised rib from a pit. So I had actually come across this article in the UK talking about the etiquette and the rules of a mosh pit. And I thought to myself, it was actually pretty funny. And I just thought to myself, hey, how can I make this association and translate these mosh pit rules into personal finance principles, right? How can I do that and have it make sense? And so, some of these associations may be a stretch, but hopefully you'll get some value out of it. And so we're going to go through these quick 8 simple mosh pit rules and how they relate to personal finance. And I'll kind of end each one with my heavy metal money rule and how I kind of make that association, right? So rule number 1, don't rush it, man. Like, kind of observe it before you jump in, right? So if you've ever been to one of those hardcore shows, if you just like sprint right into the middle, you're going to get crushed, like just wrecked, right? You don't really know what's going on. But those veterans that have been doing this for a while, they tend to watch first, right? You want to feel the rhythm. You want to learn how the crowd is moving. It's true, man. And in the circle pits, right? You want to make sure and see how things are going, and you want to sync it up before those crushing breakdowns, right? So this is what can happen if somebody rushes in to things like investing, right? They hurry up and open up a brokerage account and they start investing immediately, but they really haven't or understood like what stocks they're buying, right? They buy individual stocks and they don't really understand what they're buying, or they invest in crypto just because YOLO, everyone else is doing it and everyone else is talking about it, but they really have no idea what it is or why they should be investing in it. Some people take a huge chunk of their life savings and they invest in something that they can't even explain in plain language, right? I don't even think that counts as investing. Right? That's being careless, and it's kind of like crowd surfing without knowing how to land. Although in real terms, when I was crowd surfing, most of the time you'd be moving towards the stage, and as you came across the barricade, security would probably catch you, but I digress. But so think about it. If somebody jumped into meme stocks back in 2021 and they had no idea about the valuations of some of those stocks they were buying, they had no idea how they were going to react or the emotions they're going to feel with volatility. And they really had no exit strategy upon, if it is going to, drop this amount, then I will move out or have some sort of strategy in place. So once that meme stock or stopped, so did the gains. And I remember reading reading articles about so many people that were just left holding losses, right, that they didn't plan for. And it was brutal. Right? People losing $20,000, $30,000, $60,000, even more than that. So that did happen. So my heavy metal money rule, number 1, is to start on the edge, learn the fundamentals, and understand those basic things like asset classes before chasing the returns, right? The flashy returns that everyone thinks that you want to get, right? Take some time and understand your retirement accounts, what index funds are. Right? The fundamentals will beat the hype in the headlines every damn time. All right. Rule number 2, we pick people up when they fall, right? So if somebody goes down, you pick them up. If you slip on a spilled beer, and it will happen, you pick them up. That's the culture. That's how it's done. I remember, being in the circle pit, I'd be running around crazy. And if I slipped and went down, The people right behind you would pick you up, bring you to the side. Are you okay? Are you okay? Give them a thumbs up, and you're right back in running around. That's how it's done. So it's not a money culture that is, I got mine, or you go figure it out for yourself. Or you're mocking somebody like, oh, it sucks to be you, right? With some sort of unfortunate circumstance, right? Maybe they got into meme stocks and they lost a whole bunch of money. That's the mindset that can get people isolated, feel ashamed, and it keeps people broke, right? Now, there are those people out there that are gatekeeping the information, and they may be invoking fear in other people. They talk about scarcity, and they, in my opinion, they really have these limiting beliefs, and they're spreading this false information, if you will, right? I think helping people doesn't mean that you're just going to hand cash out irresponsibly, but it does help others. Just like we put our own oxygen mask first, then it means you can do things like teach your kids how compound interest works, for example. Help a friend budget instead of mocking them. Share your own mistakes and don't just flex the wins. I mean, I didn't get financially independent by just pretending that I never screwed up. I got there by learning, making mistakes, and getting back up when I got knocked down, right? And helping others avoid some of the same landmines that I stepped on. So my heavy metal money rule number 2 is financial literacy is spread through community. And we can all do this. And lifting someone else up doesn't slow your progress. It reinforces the discipline. All right, rule number 3. Don't be some macho jerk. Nobody likes a douchebag just throwing elbows and fists with a big head, right? With all ego, and he won't last long in the middle of the pit, man. And that's where, you may get those investors that are just big-headed. They leverage way too hard. They try to outsmart the market every week, right? The markets don't care how smart you are. Time in the market beats timing the market every single time. Index funds consistently outperform most active fund pickers over the long term, right? Day traders and those that think that they can pick individual stocks are chasing that quick dopamine fix, but they often ignore tax consequences. They blow up their bank accounts and lose tons of money. And you know what? They most likely will quit investing altogether after losses, because they have such distaste in their mouth, right? Meanwhile, the boring investor that is auto-investing in index funds keeps compounding quietly in the background. This is a total effing power move. So my heavy metal money rule, ego kills your portfolio, but discipline, patience, and consistency wins retirements. You can do this. Rule number 4, know when to get out. If it's too intense, tap out, man. There's no shame. It's all good. Live to mosh another day. It's totally okay. There are people that stay stuck because they refuse to admit to themselves things like the car payment is killing their cash flow. They're paying $700 a month on their car payment, but they just refuse to admit that it's killing their cash flow. Or they're afraid to admit that, they bought too much house. Their house is just too expensive, but they won't admit it. I think the sunk cost fallacy is one of the most dangerous pits in finance. You can quit. It's okay. There are times when we need to cut our losses and change direction. I know some people that have rental properties that they barely even cash flow. It eats up all their weekends with repairs and maintenance. It's a constant form of stress for them. And my message to them is, selling isn't quitting. It's reallocating your energy and your capital. Maybe this property isn't the one. Maybe real estate investing isn't right for you. That's okay. So my heavy metal money rule, number 4, cutting losses is a sign of strength. And staying stuck to protect your pride, well, that's financial self-harm. Let's move on to rule number 5. The big players carry more responsibility. So if you're bigger, let's say you've been around a while, you kind of got this locked in. You kind of, you've been investing for a little bit, you know the path, you know what's going on, and you're starting to get more experience, right? Well, we don't flatten the smaller people, the younger people, the people that are just getting started. We protect them. That's what happens in the pit. As your income and net worth grow, your margin for error also changes, but so does your responsibility. I've seen high earners often just blow it by lifestyle creep. They need a bigger house, a fancier car, fancier vacation. They need to do this thing. Lifestyle creep just kills those high earners. They go into even more debt, bigger debt, right? They also, some of them will take even riskier bets because, hey, I can afford it. I'm a high earner. But that's not the way I look at it. True wealth is knowing when to stop escalating risk and start protecting what you've built. It's also important to focus on more what you keep than what you make. Remember, you can be a high earner and still be broke. Wealthy people bank and invest. The pay increases, the raises, the bonuses. So my heavy money rule number 5 is wealth isn't permission to gamble. It's a responsibility to preserve. Power without control, total destruction. Let's move on. Rule number 6, just a few left. When security steps in, right? If something is getting out of hand and show security steps in, sometimes the show kind of pauses, right? But if you ignore them, dude, the show might end or you might get tossed. Most likely you're going to get removed from the venue. Not only are you missing the show, but you just wasted the ticket you paid your hard-earned money for. Why would you do that, right? So when I look at security, I look at those things that are kind of like the financial version of physics. There's like things that you cannot change the laws of physics. And the first one is taxes. Security is taxes, it's inflation, and it's cash flow, right? If you ignore any of these, most likely you're going to get shut down early, right? Someone can make really good money, but they didn't have a plan for taxes. I remember I had someone on my show named Joe that made really good money, but he didn't set aside any money for taxes. And that's a shock to the system, man. Right? And sometimes people live on this gross income illusion. All they see is the gross income. They didn't really account for, taxes, insurance, and the other deductions that come out, right? We got to look at the net, like our take-home pay, not just our gross income. And one of the last things there is no emergency fund, right? One job loss or medical bill later, the music stops, man, right? There are people living paycheck to paycheck with no emergency fund in place and no tax plan. So my heavy money rule, number 6, respect the rule of money physics. You can't change the laws of physics, taxes, inflation, and cash flow. All right, rule number 7, remember to hydrate, be prepared, and always wear protection. All right, you're gonna need some water. Stay hydrated, man. And remember, we don't want glass or anything that's going to hurt you left in the pit. Know your limits. I remember back in the day, there was a glass bottle broken in the pit and a piece of glass just sliced right through my buddy's sole of his Converse. Bro, that was a bloody end to our night, I tell you what. If you're tired, rest. It's okay. Stay hydrated and avoid things like broken glass. I know preparation can look totally boring, but until something bad hits, being prepared can be a lifeline to make you weather that storm. So being prepared is having an emergency fund, having appropriate insurance for when glass slices your foot. That same guy also went down in the pit and somebody stepped on his wrist and his wrist broke. And I remember we get home and he's like, hey, you think I should have this looked at? And he lifted up his arm and it was swollen to 4 times the size. I'm like, dude, what the hell? But yeah, so anyway, I'm sorry. So being prepared, having those emergency funds in place, having insurance, right? Also making sure that you're properly diversified within your portfolio and also keeping those cash buffers for other sinking funds and things like that you may need, right? People without these don't just lose money, but they lose the options. So metal money rule number 7, put on that armor. And armor lets you stay in the pit longer. And preparation turns panic into patience. All right, rule number 8, and the last and final rule is remember why you're there. You're there to have fun, right? You're at a show, you're having fun, you're soaking up the community. It's loud, it's fun, it's sweaty, it's cathartic. And that's the point. Money isn't about the spreadsheets. It's about the freedom that it can bring. Financial independence means being able to walk away from bad work or toxic environments, that crazy boss, right? Financial independence means being able to choose time over money. It's giving you options. It means also to live intentionally, doing the things that you want to do that bring you joy, meaning, and purpose and fulfillment in life. I know many people, money only creates stress, and that's why we're here. right? We're here to help change that stress into freedom. So my heavy metal money rule number 8, money is just the amplifier to your life. Build wealth so you can live louder, freer, and on your own terms. That's the Mosh Pit Money Code. So learn the rhythm and the flow, respect the pit always, but also protect your downside and help lift those others up when they are down. When life hits you hard, don't freeze. Keep those horns up and move forward on purpose. Thank you so much for following along. I appreciate you on this solo episode. Please like and subscribe wherever you get your podcast and on YouTube. And we'll see you next time on The Personal Finance Show. See ya!